Hello, everyone. Happy Wednesday. This is Shelley Hu, your RES broker for Northshore and Chicagoland. To better serve my client, I'm starting a series of weekly interview sessions with local experts to keep you informed about the housing industry and also on our community. So today I'm kicking off the interview with Ryan Skaggs, the top Northshore mortgage broker of the year. So Ryan, welcome, and how are you?
Thank you. I'm very well. Thank you so much for having me today.
Well, first
honored
of all,
to have an opportunity.
Yeah, first of all, congratulations on winning Northshore Choice Awards for the best lender in Northshore 2019 to 2020.
Yeah, absolutely. Thank you so much. So just feel humbled to have the opportunity. I even when I was posting something on LinkedIn, I said, it's crazy to be really excited about an award with all this other stuff going on. But it just gives you an opportunity to, be thankful for all the things over the last year, thankful for the team, thankful for great partners, thankful for great clients. So that for sure is a good thing. So
yeah, I know how hard you work and how well you serve your clients. So it's well-deserved recognition and congratulations.
Thank you. Thank you.
So, today I really appreciate your time joining me to chat about the house mortgage market. As we all know, we are in a special time of COVID-19. So the pandemic has pressed a pause button of our world and have traumatized our daily life, our work, and our business world. There are a lot of uncertainties out there, and also there are a lot of questions on people's mind. We can't tackle all of them. So today we're going to focus on 3 questions, which is in your area of expertise.
Okay.
So here comes the first question. As we all know, the house mortgage market has been very volatile since the embark of COVID-19. We see historically low interest rate, but we also see more strict criteria for mortgage application. So could you let us know how the mortgage market as of today in terms of mortgage rate, down payment, credit score requirement, and application process?
Yeah, absolutely. So great question. It's got a lot of little tentacles into a lot of other things that are going on in the mortgage world. But over the last few weeks, we've really experienced a tightening of credit policy. I do believe that's obviously with what's going on, that makes total sense. That the average person with average credit with an average down payment still has the ability to get financing today. So that is a common misconception that there's very little lending going on or anything like that. I've never been busier in my life. So, and with purchase transactions as well, not just refinance, but purchase as well. But what we've seen in the headlines and what some other banks and lending institutions have done is that you've got banks like Chase, for instance. They just came out last week and they raised their minimum credit score to 700 and were requiring 20% down. So that hit, CNBC and all the different Housing Wire and all these different articles, and they made it seem like the entire industry was there. Now it makes perfect sense with their servicing platform and the other areas that they're in, that they need to be very cautious. But for a lender like Guarantee Rate, like for us, that is very well capitalized, that's has the ability to be agile and fluid. We have a strong balance sheet. We're going to Fannie Mae, Freddie Mac, Ginnie Mae. We can still do 5% down, 10% down, 15% down. We can do, credit scores in the mid 600s. Previously we could do it lower for sure. So there has been a tightening, as I said, but I think that makes common sense. Underwriting policies have really come into place with all this. To your point about some of the things going on pause, we've seen a lot of HELOCs or home equity line of credits. Those types of institutions or those programs have paused. They're just not taking any new loans. They're just trying to figure out what money they have out there. And, given that they're all trying to work from home, it's a very difficult environment for a lot of these financial institutions. Out of the box loans, that's another one. So anything that was out of the box, outside of that kind of little square everybody tries to fit inside to get a loan, there's a lot of loans that are, you know, outside of there. So to give you an example, somebody that's self-employed that doesn't show the income on their tax returns, I would potentially have like a bank statement loan. We could look at 12 months of bank statements, and we look at how much they're putting in each and every month to be able to calculate income out and be able to give them a loan based on the bank statement loan. That type of program is paused because, again, that person that maybe didn't show as much income on their tax returns and they're putting money into the account, like, is that the best representation? Are they going to be able to make that payment over the next 6 months? Or, you know, there's just so many more questions in today's time than there was before. So we've seen slightly higher reserves, slightly higher credit scores. Again, the clickbait articles that, you know, make it sound like lending is so impossible right now. It's just not true. We have so many great options. You mentioned before, we are at historic low interest rates. I mean, we are literally at a 50-year low or within an 8 thereof right now. So, so we definitely have had a lot of changes. But, you know, long story short, people can still get loans. So we're still strong on the purchase business. We still have people going out there and shopping and, you know, functioning in this market.
Right. It sounds like with people with credit score over 700, right? So 700 is the cutoff line.
I can still go down to 640 right now. So I still have the ability to potentially do like an FHA loan in the mid 600s. If you're going to do jumbo financing, which is 510, 400 and above, that's typically a 700 now, down from or up from maybe a 680 previously. So, you know, we've seen those slight changes of 20 points up or whatever it may be, but you could still have a 680 credit score, have 5 to 10% down. And, you know, if you're employed and you have stable income, we can get you financed for sure. So, and we're not talking about a crazy high rate either. So I've had that question multiple times of like, well, I don't want to pay some, you know, whatever rate with my 691 credit score. And I was like, okay, what about 3.5% on a 30-year fixed?
Right.
And he's like, seriously? And I was like, yes. I mean, our FHA, I locked somebody in at 2.75 with, you know, and their credit score is in the 600s, 2.75 on an FHA. It's like mind-boggling how low it is, and that common misconception that there's not the ability to have, you know, these industry-leading rates that we can offer, you know, to clients. So it's definitely available. So,
well, that's wonderful. I mean, it really sounds like great opportunity for buyers to buy a home right now with such a low interest rate. I'm sure with your help, you know, they will make the process so, I mean, smooth, and it will be great. So here comes the second question. Due to COVID-19, what advice would you give to home buyers for financing or refinancing?
Yeah, absolutely. So at least in terms of the financing side, it is so important right now to get in touch with the lender upfront, be honest and transparent about the income from day one. Because I send an email out to all my clients during the process, you know, the bullet points, a few different things, but I'll just steal a few little key points out of it. It just says, if Google can figure out that your business is closed, so can an underwriter. You're not doing yourself any favors, you know, by, I'm getting paid right now, but I know my business is closed and I'm not sure I know how long till I get back to work. Like, you know, that's good that you're getting paid, but if you're not working, like that can only go for so long, and we can only get so far in the transaction before it's going to look like Swiss cheese. We're going to be able to poke holes in that and say, hey, we did a verification of employment. You know, we asked recently for a client that was getting ready to refinance. We were clear to close and we were doing our final verification, and the owner of the business just said, yeah, they're paid right now, but I'm not sure what's going to happen going into May. So we just had to pump the brakes. We stopped. We said, you know what? We've got a rate lock. We're going to extend it for free. And then once you open back up, or he can then say, hey, I can now verify your employment past the next 45 days, then we can move forward. You know, but really it was just a slight pause. You know, we just put it on the shelf. We're going to grab it back out. We still have the rate locked. I want to say they're at like 3.125 or something. I mean, it was a great rate. So we'll just extend it for them, and then we'll close once, if they can open up May 15th, then we know from the owner he's going to be able to pay the salary because he knows he can open back up, then off we go. But, you know, my advice is just being open and transparent, especially people that are self-employed. It's crucial to be able to get all of that out in the open now, to be able to see what sort of financing is available and or your timing. So maybe it's not possible today, but maybe it's possible once X, Y, or Z happens, right? So, you know, just having an understanding of that. And then to piggyback that point, I firmly believe that, you know, 2019 was a pretty solid year in real estate. 2020 was set up to be even slightly better than 19, even with slightly higher appreciation of homes, lower rates, and then COVID happened. So we're taking we're in Chicagoland, so I don't even want to say a 12-month buying season because that's laughable that people are really buying in the middle of December. But, you know, let's say 10 months, you know, of the year of a buying season, it's going to be truncated down to maybe 4 months, 5 months, 6 months, right? So they're going to basically take what normally took this long, and all of them are going to be the pent-up demand into this. So I firmly believe that it's going to be a very competitive market come this fall, when people can go out and, you know, do more and more. And if you don't have your ducks in a row, if you don't have a strong pre-approval, if you don't have all your documents in and understand what you can and can't do, even just for the next month or two, I think that's going to be the case. Because people that are on the market right now want to sell, right? Otherwise they wouldn't be on the market. So
exactly.
You need a, you know, offer, and the other people that are wanting to buy, you know, like that's so important to have that ready to go and to know exactly what you can do from a lending standpoint. As our example before, if you had a 690 credit score and you had a pre-approval with Chase, you no longer have a pre-approval. Like if you're not keeping in touch and understanding what's going on in the market and, you know, working with the right lender, whoever that may be, then, you know, you've not really prepared yourself for that purchase transaction. You haven't put yourself, you know, at a level for success. So
right, exactly. I believe the month of July and August will be the new, probably March and
February,
April,
March.
right?
Yeah,
Of real estate.
absolutely.
You know,
absolutely.
I have a client, you know, she just quit her job. She quit her job. She was a doctor. She quit her job. She's staying home, but she's thinking about buying a home, but without the income, can she still get home with her?
Absolutely.
Depletion?
Yeah, so we call those asset depletion loans, and those are still available. So essentially what we're doing is we're deriving income from the underlying asset. So if that's retirement, if that's a brokerage account, if that's a trust account, if that's a savings account, whatever it may be. Yeah, and it depends on the income calculation, depends on the age. You know, if they're at retirement age, we can count more. If they're not retirement age, we can count a little bit less. But we can derive it out of that asset account and be able to say, okay, based on this account at X dollars, we can give you Y amount of income per month. And that can actually supplement other income that maybe they're receiving. Maybe they were, you know, had a kind of a side business that they were doing while they were self-employed or something else or whatever, or, you know, employed, you know, or that can just be their primary source of income, just deriving that income from the asset. And that is 100% still moving forward. It's, you know, market rates. So still have the ability for a scenario like that to be able to still be able to finance and get to the closing table. So
that's wonderful.
One thing I'll add is you don't need to liquidate. People always think like, well, I'm not going to do that because I don't want to have to pull money out of retirement. We don't need you to do that, right? So we are just looking at the statements and making our calculations based on those statements. You don't need to pull it out of retirement, put it in a checking account, have it ready to go or something else. You don't need to necessarily do that. So
okay. And also for the folks who are considering refinancing, what advice would you give them?
Yeah, so refinancing, the number one thing I could say is patience, because those transactions are taking considerably longer. Our purchase transactions are still at 30 days. So we are still knocking out 30-day closings from the day you apply to the day you actually get the clear to close, and or actually are closing. You know, so I've got a couple files that I believe the borrowers applied maybe like 8-9 days ago. We're conditionally approved. We have one condition left. We'll probably wrap it up in 2 weeks. You know, for those clean borrowers that, you know, are vanilla, we are so quick on those. But by being able to be fluid and be able to keep those purchase timelines, that is at the consequence of those refinances are probably 45 to 60 days.
Okay.
Maybe even some 60 plus for the more complex. You know, we're locking in a 90-day rate lock just to make sure if there's anything that comes up, we have the ability to not have to go back to a client and say, oh, borrower, I need to charge you for this amount of money. I've heard more than a few banks that's really disappointing that there's some policies out there where they were locking them in for 30 days, full well knowing that they wouldn't be able to get to closing. And then they'd be 30 days into a transaction and say, okay, well, it's going to cost $474, you know, for you to extend your rate and get to closing. That's ridiculous, you know, to know that after you've already been in 30 days or after you've already been in 45. So I was really happy with the policy, you know, 90 days. That way we know 45 to 60 is a good number and we're knocking those out within that 60-day period, literally every day. So, you know, feel really comfortable on that. But, you know, for the refinance, to go back to the original point, is being very transparent with the income. Fannie Mae and Freddie Mac, the two largest buyers of, you know, loans, they're government-sponsored entities. They're buying the loans under 510 400. They are looking for final verification of employment very near to the closing, very, very near to the closing. We're doing our final verifications within 3 days of closing on a purchase and within 2 days on a refi. So that means we're calling up the HR department or the manager or the owner and saying, you know, is Shelley still employed today? Is she still receiving X amount of dollars per month? Is she still doing this? Okay, great. And then we can close that loan. But that was previously happening much before, right? But with all the job loss and potential, you know, short-term unemployment, we're doing that right at the end. So just being very transparent upfront. This is my situation. This is what I believe is going to be happening, you know, really allows us for success and a streamlined transaction.
Right. So no surprise down the road, you know. Right. That's wonderful. Well, the information you just shared is definitely terrific, Ryan. As part of the CARES Act relief package, a forbearance program for government-backed loans has been implemented. And more than 2.9 million homeowners are on it right now, which accounts for 5.5% of all mortgage. So can you shed some light on the forbearance program and what should the consumers know about it?
Yeah, absolutely. I was knowing that we were going to talk about this today, or at least have the topic of it, not knowing exactly what we get into. I looked up the pure definition, and this is one of those things where I think is again, a common misconception sometimes. So I've got the question of forbearance is I get to skip payments or I get to do this. Now, the one summary point I can make on all of this conversation is your servicer of your mortgage is the only person or the only entity that really has the information, right? So each and every single bank, lender, servicer, whoever it may be, has a slightly different policy, program. You know, there is a different application process. Some of them have you go online, answer, you know, a few questions. Some of them you have to get on the phone. Some of them you have to sign a full application package. And each of them would have a different scenario on how you're quote unquote paying it back. Are they putting it at the end of the loan? Are you paying it back? If you omitted 3 payments, say your payment is $3,000 a month, do you owe $9,000 in 3 months? Maybe. If you got to read through the small print and understand exactly what that means, because each one is treating it differently. Some of them are taking that $9,000 and dividing it over the next 24 to 36 months. So your payment only goes up a couple $100. That seems, you know, incredibly fair. You know, some people are putting it at the end. So first and foremost is the individual servicer. So one person that has a loan here, roughly the same amount that here, they could have drastically different forbearance programs. I pulled this from, I don't want to suggest that Wikipedia is by far the best source of information, but I did pull a, I don't want to say a quote, but their definition of mortgage forbearance. I thought this was really interesting because this is so true that people don't necessarily realize.
Mm-hmm.
So mortgage forbearance is a special agreement between the lender and the borrower to delay a foreclosure.
Mm-hmm.
The literal meaning of forbearance is holding back. When mortgage borrowers are unable to meet their repayment terms, lenders may opt to foreclose. So what it really is doing is saying, hey, you can miss these payments and we won't do anything about it. That's really what they're trying to say in simple terms, right? Is that you can miss a few payments and here's what actually happens. That's why I would suggest you've got to read that small print, got to understand exactly what that means.
Mm-hmm.
They're not necessarily going to send you, you miss one payment into foreclosure. That's not how it works.
Right.
But by definition, right, a forbearance is a period of time that you're working out with the person that, has the note, with the lender, to say, to delay any sort of negative recourse. And the CARES Act said you're not supposed to have any late payments. I've heard of only a couple of instances, and I think both of those got fixed for the borrowers that started the forbearance, but then ended up getting hit with like a 30-day late. They called, they got it figured out, everything was good. But you just have to consider that a forbearance is not just truly skipping a payment. The word deferment gets thrown around as well. This is a forbearance program, not a deferment. So I pulled this from bankrate.com. Deferment is an agreement between a lender and a borrower to temporarily suspend debt payments.
Right.
So if you just say, hey, we're just not going to collect anything, we're going to wait 3 months and then we'll just collect the rest, right? So they're deferring that payment. So that's somewhat of what's going on. But what the CARES Act said specifically is forbearance. There is, here's an outline of a forbearance program, which is different. So a lot of people know these terminology from student loans and stuff like that. But again, the resource here is the individual servicer that's going to be able to go through the small print. And, if they have questions, I've already looked through quite a few of them for different clients, for different people. But, reach out to myself, to Shelley, to a lender, to, someone that you trust. But you need to look at the small print to be able to understand how it's going to affect you down the line.
Okay, that's great. That's wonderful. So thanks so much, Ryan, for sharing all this information. It's definitely very insightful and helpful. I'm sure my clients will benefit a lot. Yeah. So before we wrap up our conversation today, I know you have a really super adorable superstar in your house.
Yes, I've got a 2-year-old running around somewhere. You might be napping right now, but I don't hear him yelling and screaming, which is probably a good thing.
Laughing. So. Oh, I was kind of wish he can give us a guest appearance so I can so our video can go viral.
Yeah, he's quite the character. So I'll see if I have anything good here. So
he's super adorable. And
we were wearing sunglasses the other night. That was quite fun.
God.
So yeah, we were having lots of fun. So yeah, so just trying to teach him the business one day at a time. So
I know every time he's in your video, it's a must see. It's the video of the day.
Yeah. Yep, he's a lot of fun. He's a character when he jumps on camera. So yeah.
So Ryan, it's a joy of chatting with you today. So I learned a lot about mortgage market. I'm sure my clients and audience will get a lot out of it as well. So if they have any questions, I will surely direct them to you if I can answer them.
Yeah, obviously it'll be linked up on Facebook and probably other social media outlets. So just, contact me through, direct message. You can always email me, rs@grarate.com. You can feel free to give me a call, 773-569-8692. But always there to try to help as best I can, even if it's something I can't help in. We can put together a plan, or I can hopefully get you referred to someone that can help. So
wow, that's awesome.
Thank you for the opportunity today. Appreciate it.
Oh, thanks so much, Ryan. So for those of you who are watching, if you have any questions, as Ryan said, feel free to email, text, messaging, call. He's here to help you. I'm here to help you. And we are trying to make you have a successful purchase, refinancing, help you succeed in this market. So that's all for today.
Excellent.
Bye.